Weekly candle sweeps liquidity from the upside. Breakdown on the daily time frame. Is the market ready to fall again? Let's analyze. This content is for educational and informational purposes only. It is not financial advice. Trading futures, options, and crypto involves substantial risk of loss and is not suitable for every investor. Past performance and chart analysis do not guarantee future results. Always do your own research and manage your own risk before making any trading decision. Here's the weekly time frame chart. Bitcoin started its upside move by sweeping the liquidity of its previous week's candle from the downside. Now, the market will remain bullish until it sweeps any weekly level or weekly candle liquidity from the upside. Now, let's come to the present market. Here, the weekly time frame shows a liquidity sweep of the previous candle, which can be a sign of a bearish move. But it's not that simple. First, let's analyze, is this liquidity sweep even valid? To find out, let's move to the daily time frame chart. What we see here is the first candle, which touched a previous week's high and closed below it, sweeping the liquidity of that weekly high. But it did not sweep the liquidity of its previous daily candle. The next candle goes above and closes above the previous candle's high. Then the third candle, which is Wednesday, did not close below the high of Monday's candle. Here, neither a sweep nor a grab of Monday's candle happens. Because of this, the weekly liquidity sweep from the upside is invalid. Now, let's draw the major zones first on the weekly time frame. Wherever we find two candles with at least one candle gap, and either their high, low, or close and open are very near to each other, we mark it as a zone. Here, we find one zone at the top. Then, another major zone at the 65,500 level. And another zone at 64,700. At first, it looks like the market swept the liquidity of these zones. Let's analyze, is that zone liquidity sweep valid? We'll apply the same concept as before. First, move to the daily time frame. The Monday candle sweeps the liquidity from the high of the 65,500 zone. But this daily candle didn't sweep the liquidity of its previous daily candle. The Tuesday candle goes up and closes above the previous candle's high. Next, the Wednesday candle closes above Monday's high. So, neither a liquidity sweep nor a liquidity grab of the zone happened. Now, let's analyze the daily time frame. Here, we can see one trend line on the downside of the move. And here, you can see the breakdown of this trend line on the 24th of July, Friday's candle. It looks like a bearish trend on the daily time frame as well. But here's another catch. There is neither a liquidity sweep nor a liquidity grab happened in this move on the daily time frame of any candle, which makes this breakdown invalid. One thing, the market will never tell you where it's going. Like in this chart, weekly and daily, both are saying downtrend, and after this, it's still waiting. The market will never wait for you to catch its direction. If that's happening, it's a trap. The conclusion is the market is still bullish. Just wait for a sign, a liquidity sweep or liquidity grab from the downside. Then enter. The market is ready to give a big move upside. If you want personalized chart analysis on your own trades, links in the description for my Fiverr gig. Subscribe on YouTube and follow us on Instagram for more weekly analysis like this. You can also check our LinkedIn handle, ConfluenceFX, for our past analysis.